Steve Perry here on 1FM 91.3, 9:15 on the morning drive with FD and Carrie. And today in the studio, we're going on Facebook Live in just a bit, okay, with those prizes from Dami Kelly. But welcome, Axel and Joey.
Hello.
Hello.
Thank you guys for joining
Thanks
us.
for having us.
Okay,
Yes.
come closer to the microphone, okay?
Okay.
So Axel and Joey, they're brothers.
Yeah, we are.
Right?
Yes.
Yes. I made the mistake of, guessing who's older or who's younger.
This is where 69 years old, you know when to shut up.
Doesn't matter. You're still both younger than me, or rather FD.
Everybody's younger than me.
That's true. And we've got the Axel and Joey here today because financial planning. You're financial advisors.
Yeah.
Right?
Yeah.
Yes, we are.
And let's be honest, most Singaporeans are actually
I feel they are.
underinsured.
First of all, do you agree with that statement?
Yeah.
Yes.
You
We
do,
do,
right?
we do.
Okay.
Yeah.
But the questions that people ask are, do I really need this insurance? Am I being oversold? It's questions we ask, but we don't ask out loud.
Yeah.
So this is what we want to deal with you guys. Everything from newborns to young adults.
Yeah.
Okay.
So let's
And
start.
even people older.
Let's start with newborn babies. Let's say I've got a new baby coming, and every child in Singapore has MediShield
Yeah.
Life, right?
Yeah.
That's a basic healthcare plan,
Yes, correct.
right? But parents obviously they want to do more. They want to enhance the package and all that. At this point, for a newborn child, how much coverage or protection should parents realistically have for the baby?
Okay. So I'll actually break a insurance into two different categories, right? So one of the first category, right, is what you call the pay your bills kind of insurance, right? Pay your bills insurance is that in the event, right, if your child needs to go to the hospital, right, it pays your bill. You don't need to fork out a single cent, right? So these are the pay your bills kind of insurance. The second category is actually the pay you a lump sum. So typically this pay your lump sum, right, it can be seen as optional, right? So I'm going to share an example, right? I have a kid, right? I have a kid 3 years old, right? And if I love him to bits, right?
Of course.
Yeah, he's the reason why I'm doing all this. So, right? So when if let's say he falls into an illness, right, a critical illness and all, I would not want to bury myself in work, right? I want to be there.
Yeah.
I want to be the caretaker, right? So how can I be able to do so, right? It's only if I have the option to do so financially. Okay. So in that case, is that I'll get perhaps something like a critical illness policy on him. If anything were to happen, there'll be a payout. With that payout, I can say, hey, you know what? I'm going to put some of my work aside. I'm going to focus on him, right? Focus being the caretaker.
Right.
Okay, so
Yeah,
So these are the two different kinds.
Critical illness.
Yes.
That's something parents need to
Yeah.
top up.
Yeah,
Right? If
it's
let's
a
say you're
top-up.
looking for to buy coverage for a baby, a
Yeah.
newborn,
A
right?
newborn.
Yes.
Okay.
How does that differ from, say, something like personal accident?
Oh, good question.
Different.
Yeah.
Different.
So for personal accident for babies, is that what you're talking about?
Yeah.
Yep. So usually for personal accident for babies, it takes care of the outpatient portion of things.
Right.
Yeah, so it's not that it's not important. Yeah, it belongs to that category, like what Joey mentioned, where you pay your bills. So take for example, we do have clients like, let's say the baby accidentally was at a sofa and then
Rolled off.
roll off.
Yeah.
It's a very common thing,
Yeah.
and the parents would be like, oh, should we give it a few hours to see if anything is up? Then we bring it to the doctor. But with a personal accident plan, immediately you can say, hey, I have an insurance covering that. It's gonna be claimable.
Yeah.
I'm just gonna go straight to the doctor
Yeah.
to check out what's going on.
You don't have to worry.
Yes, that's right. So
Okay.
that's, I think, a part where I think the parents can come in to purchase that policy to make sure that the baby is covered.
Okay, so we're gonna go on Facebook right now. Please join us there.
So staying with babies for a little while more. Is there an age at which point you start to insure your child? Do they have to reach a mortality? You know what I mean? There's a certain mortality point.
Yeah.
Do you insure after that point, or can you insure from the day they're born?
Good question. So basically, the MediShield Life, right, we have in Singapore, insures the child from birth. So
Yeah.
when they
Yeah.
are born,
Yeah.
right, and they will get insured by MediShield Life. So this actually solves a very big problem that parents face, which is this thing called congenital anomalies or congenital illness, right? Because when your baby is born, you can't buy insurance yet.
Oh,
Yeah, not
Cannot?
yet. Yeah, you can't.
At
So
what age?
So it's only 14 days after.
Yep.
Okay.
14 days after, right? So with MediShield Life, at least, right, if there's any congenital issue, it comes in to help.
Right.
But after 14 days, let's say the child is fine now, you can make the option to say, hey, I want to buy something. That's where the two categories come about.
Yeah. Okay.
Right? One to buy it for the pay your bills, the other is the lump sum benefit.
So there's a 14-day wait period.
Okay. So say you're in your 20s, right? You're healthy, you're just starting your career, but money is tight lah. Obviously, you know, first paycheck and things are so expensive. But how can you just ensure that you're still covered? What kind of, you know, plans are we looking at? What percentage of your income should you be investing or you know, putting aside for insurance?
Yep. So I think for people in this category, it's, if I can walk down memory lane, right? It's very raw because that's the time where you kind of learn how to adult.
Yeah.
Right. It's the first time you're gonna receive a paycheck, income, and you're just trying to figure out things as a young adult. And I think the more important question to ask is actually, what do we want to achieve with the money that I have now? Because it's no longer like a $500 allowance. It's gonna be quite a big amount. And I guess the question is more like, how do we want to steward our finance? So after we find out what are all these priorities, then I think it's easier to figure out, hey, whether I have surplus to look into all these things. Okay, so one of the common things that we see is that there definitely are guidelines out there. Let's say we use 5 to 10% of our income to cover for our insurance needs. 15 to 30% to go into investment. But everyone's circumstances are very different. I've got clients who are still paying off their university loan. There are some that are trying to save up for their new house. So I'll say it's more important that we focus on the surplus more than the percentage, because sometimes it can be very stressful. Because you know, online everyone's saying you need to do this 5%, 15%, and then but you know your circumstance, you can't afford you know, all these guidelines and things like that. So I think it's more about finding out what that surplus is and planning from onwards from there.
Okay. The next phase in someone's life would be they're probably going to get married. The kids will start to come. There's the big HDB, mortgage, financial responsibilities are piling up. What happens then? How much coverage should couples aim for at that stage? Protecting themselves, the family, there's the house, how do they do this?
So basically I am in that situation.
Okay.
Right. I have kids, you know, I have parents to take care, you know, for the house and things like this, right? So I really can feel, you know, parents having like, they heave a sign, right? It's like, you know, wow, there's so many things. I need to burden. It's like the guy, right? They have to hold the world globe. You know, the guy on the shoulders. You know?
Right?
Big burden and all. So I would like to also put in this point is that you know, parents are like what I call the engine of the car, right? So the engine of the car is supposed to power through the journey, and the kids are like the passengers. The kids are the reason for the journey, right? But they don't power the engine.
Right.
Yeah. So parents, right, have to take note that as much as Singaporeans we like to buy things for our kids, buy insurance for our kids, right? The more important thing is to buy things on the engine. Right?
Okay.
On the engine, right? So the parents need to be insured. So we look at typically, right? We're looking at two things. So first is liabilities, right? If I have a loan to service, right? I need insurance for it, right? If I have like, you know, a loan of $500,000, $500,000, right? Singapore is quite expensive, right? You need the $500,000 coverage. Anything happens, I can maintain the lifestyle. All right. The next thing you need to think about is this: is that when you have kids, right? It's not just you know, kids who are in their 20s or 30s, they're young kids. You have to provide in terms of their financial security for the next 20, 30 years. Right? So in that sense also, you are actually buying to ensure that they can walk that path. Right? They won't, the family won't fall into debt. Right? So these are the two main points.
Yeah. I know FD is a big fan of these endowment plans, right? You got them
I'm
for
huge.
all your kids.
I got them for my kids. I've got them for myself. And they're paying out at different points in my life because I looked towards retirement, and these are all my bonuses for when I retire. You know, if I didn't put the money into this, I would be wasting it somewhere. You know, I'd be online shopping platforms.
But shopping
I mean?
makes me so happy.
Yeah, I know.
Yeah.
But when you're 70 and you receive a big fat check, that makes you just as happy.
Yeah, it's true.
I suppose.
It's
yeah.
delayed
For
gratification,
me,
yes.
I think I mostly just have the basics.
Mhm.
I don't really buy into endowment.
Yeah.
Do you think that's like
Yeah.
a mistake? You
Yeah.
know, or what should I be doing
Yeah.
to be more well covered?
She has a 9 and a 13-year-old.
Yeah,
Okay,
yeah.
okay.
How? 9 and
Yeah.
13-year-old.
Yeah. So I would actually perhaps go back to the intent of insurance in the first place, right? So I like to describe it, right? And oftentimes I describe it in this manner, a more lighthearted matter, is that insurance is very similar to the tension between Batman and Gotham City. Right?
Yeah.
Right.
Okay.
So in good times, hunt Batman down.
Okay, hang on. Stick with that hunting Batman down, okay?
Okay.
Paula Abdul here on 1FM 91.3, the promise of a new day. And here in the studio with us this Thursday morning, we got Axel and Joey Ng. They are financial advisors, and we've been talking about coverage, you know,
Yes.
how much is enough for different stages of your life. So we were just talking about
Someone like you.
yeah, someone like me, you know, my kids are 13 and 9. I only have like basic stuff. I think I've got PA, I've got hospitalization. I don't know whether I have critical illness. Life for sure,
Yeah.
you know. So am I lacking? Am I missing anything?
Okay.
So,
okay.
And you gave us a Batman
Yeah.
Gotham City.
Yeah, I did.
Interesting analogy.
Yeah. So in good times, right? We Gotham City doesn't want Batman, right? It's like, wow, you know, I want to reduce their presence, right? Reduce the presence of Batman. But in bad times, right? The bad light comes up.
Yeah,
Right.
yeah.
I need it.
Yeah,
Right. I need
yeah,
it now
yeah,
and
yeah.
all. So there's this tension, right? Because back to insurance, it's like the premiums that I pay,
Yeah.
right? Because I'm paying for something, but I'm only shining a light only when I need it. But in good times, it's like, oh, I need to pay a lot, huh?
Yeah. Every month,
Every month,
paycheck in, next thing you know, nothing left.
Nothing left, right?
Yeah.
Yeah. So I think it goes back to the intent, right? What am I doing this for, right? You know, am I doing it for my kids? Am I? What's going to be the financial impact if I don't have it? Yeah. If really things happen, what is going to be my current situation? Do I want to maintain the current lifestyle that I have? Now, with this intent, right? What will happen is this: you are no longer servicing the insurance. The insurance is servicing you.
That's a good way to look at it.
It's a good way to look at it.
So,
yeah.
Then how do we take a step forward? How do I then use plans to prepare me for later in life when I'm 55, 65, 75?
Like nearing retirement.
Retirement.
Or retirement.
Yeah.
So how do we use plans?
Yeah.
To
To do that. So are we talking about, are there only endowment plans? What kind of stuff can I do to help myself in that later stage of life?
yeah.
No,
so
because you know why? As you grow older, right,
Yes.
and you want to buy anything, it gets more
It gets
expensive.
more and more expensive.
Yeah, more
Yeah.
expensive.
Yeah.
So for somebody who's listening in now, maybe 50s or
Yeah.
40s, 50s, you know, and thinking about buying into some form of coverage,
okay.
like the more critical plans that they should look at, you know, if
Right.
they're starting at that stage.
Okay, so let's say if they are starting at that stage, I'll say the most essential, like going back to what Joey mentioned, is actually to pay your bills.
Yeah.
Because as we know that as we are older, the probability of us landing into the hospital is a lot higher. So we do know that hospital bills can be pretty large.
Yep.
So the pay your bills kind of insurance is really critical. So if someone out there is like 50s, 60s,
Yeah.
I'll say you have to prioritize that, which is your hospitalization plan.
Correct.
That it's your foundation.
Right.
I think when it comes to anything else, as they are steering towards retirement, you know, because that's where you want to sustain your premiums and things like that, critical illness may or may not be as important. Because let's say if you have dependents, your dependents most probably would have grown up,
Yeah.
have wings, they'll be an adult. Your house most probably will be paid off because you know our housing loan is like 25 years, 30 years. So you don't really have a lot of liabilities or dependents. So when it comes to other coverage like critical illness, it may not be as important, but we still need to make sure that we have insurance that defray the bills when anything unexpected happens.
Okay, we're going back on Facebook, so join us there.
The Morning Drive.
I have a question. That is very interesting. We're with Alex and Joey Ng, financial advisors. Question: a lot of people have different insurance companies for different things. What happens if I have different insurance companies for the same thing? So I have a life policy with company A. I have a life policy with company B. I have a life policy with company C.
Yeah.
If anything happens to me, all three policies pay off, correct?
Yes, you're absolutely right. So it's actually a stacking, right? So it stacks upon. So if let's say with company A I have 100,000, B I have 100, and C I have another 100. What the payout will be
300.
So there are no laws that say
You can't.
you can't.
Yeah, there's no loss.
Okay.
There's definitely going to be limits. Like for example, I can't buy like in a sense like based on my life, I can buy like 30 million or 40 million. They have to look at a what I call a multiple of your income.
So how much you're able to buy is dependent upon your income at the time of purchase.
At the time of purchase.
Yeah,
Exactly.
because they want to know that you will be around to service the loan. Like
So-
you'll be able to.
Okay, assuming I'm 30 and I'm doing this and I've got this limit, and I reach that limit, say at 40.
Yeah.
But at 40, my salary has now gone up.
Yes.
So I can add on?
You can.
Yes.
Yes.
Okay.
I see.
Yeah.
Okay, on our Facebook right now, if you're watching us live, right, we're going to give away a prize to a beautiful restaurant called Damikele Singapore. Okay, all you have to do is just answer the question that's actually on
Scrolling across
the Facebook live session, and just drop us a WhatsApp at 88550913, or actually just give us a comment on our Facebook, and then we'll pick out a winner from there.
Absolutely. Absolutely.
Okay. So many people also worry about being oversold or, paying duplicate coverage, but it actually doesn't matter.
So duplicate
right?
coverage doesn't matter because it's going to pay out at the end of the day.
Yeah, you're just going to get more money out of it, right?
Yeah, you're absolutely right.
As long as you
Yes.
can afford the premiums, it's okay to do that.
Yes.
So financially, I mean, insurance terms can be confusing for a lot of people. I mean, I'm confused sometimes. Like my insurance agent comes to me and say, hey, you want to get this. I'm like, but this one sounds like the one that I already have,
Yeah.
So how can people at any stage of their life, right, make sure they understand how, the coverage that's involved and how to avoid surprises?
Yeah. Okay.
So I think there are two key things. So of course, firstly is that you got to find a reliable and competent financial advisor.
Yeah.
So I guess the duty is on us to be able to break it down to, the average consumer, because we deal with insurance on a daily basis. You guys don't. Yeah, you guys maybe review them only once a year or once every 2 years.
Yeah.
Correct. So I think firstly that is one way so that we can really understand what policies we really have. The second way, of course, I think we are in an AI era. If we really do not understand certain jargons, plonk it into ChatGPT.
Wow.
Say break it down so that a 5-year-old can understand.
Understand this.
Yeah, so I mean these are ways even before going into a meetup with your financial advisor. At least you kind of know what are the things that you are confused with. Clarify with him, and you can do some homework. So sometimes it's just a necessary thing. We just have to do it once a year.
Yeah, the other piece of advice I would give anybody listening, I only do this because it's happened with me. Your financial advisor is your financial advisor. Stay in touch with him.
No, but here's the thing.
Because you want your financial advisor to be your friend.
You think so?
Wise words.
Absolutely.
Okay.
Absolutely.
Yes.
Okay, so my advisor is somebody that I've known for a very long time.
Okay.
And the thing I like about him is he checks in
Yeah.
Yes.
with me.
Yeah.
Unlike some other,
don't.
advisors who don't,
Yeah.
right? And who only they come to you and then they want to sell you something
Yeah.
new.
Absolutely right.
So I think
Yeah.
that's the most important thing, being there for your clients.
Yeah.
Right?
Yeah, correct. So for us also is that when we talk to our clients, right, we usually ask them this. It's like it's gonna be like in the next 20, 30 years and all. You need to like this face,
Yeah.
right? Right. So if you don't really like this,
Yeah.
right, it's okay.
Yeah.
There are plenty of options out there,
Yeah.
right?
yeah.
But you have to have that kind of partnership.
For sure.
Okay, thank you so much for coming by, Axel and Joey.
Our pleasure.
If let's say our listeners who are watching this, they want to get in touch with you guys, how can they do it?
Okay. So basically, we have the Instagram page, right? We are part of TeamDefy.sg, right? So what you can do actually, you can just message us there.
Okay.
Right? If you have any queries, anything, we can actually answer from there.
Okay.
Cool.
Thank you very much for coming in today and joining us
Thank you for
here
having us.
on The Morning Drive.
Good times. Greatest hits. 1FM 91.3.